What's going on, guys? In this training video, we are going to cover pending orders, all right? So we're going to actually talk about all of the order types on MT4. So the first order type is known as market execution, or also known as buy or sell by market. Okay, so if you ever see one of my signals and they say buy by market or sell by market, what I mean is to place a trade with market execution. Okay, so market execution is the first order type in the most basic order type. Some of you have already been placing market orders, okay, so you might be familiar with that. The next two types are stops and limit orders, okay, stops and limit orders. I'm going to verbalize this, and then we're going to go through MT4 and look at it. I know some of you are audio, some of you are visual learners, and then we'll combine the two. Number one is a limit order, okay? A limit order is when you place a buy or a sell limit, you're expecting the price to exceed your order and then do a U-turn and come back down through it or up through it if it's a buy. A stop order is when you're expecting price to stop or hit that point and then keep going. Okay, so we're going to talk about exactly how to use these three. Again, market execution, limit, and stops. Okay, and we have buy stop, sell stop, buy limit, sell limit. So I'm going to go ahead and share screen, and we're going to talk about this a little bit. Now, here's the thing, you guys. If you guys are brand new to trading, this can be a little bit confusing. Okay, at first, you might be a little confused by this concept. So I want to go ahead and show you where to find the order types and then why you would place a particular type of order. Okay, so in terms of market execution, there's a distinct advantage to getting in on a trade at market execution. So I'm going to go ahead and open up Euro USD. We're going to go ahead and take a look at this pair. Okay, now we are on this demo account here, so I want to go ahead and show you an example of market execution. Okay, now when would you use market execution and why is it advantageous? Now, here's the thing, because we trade in the Forex market, it's the most high liquidity market in the world, okay? Because $5 trillion flows through it per day. Whenever you place a trade, you're gonna have high liquidity, which means your order is gonna be filled. And with market execution, it's an instant trade, which means as soon as you place a trade at market execution, you're instantly in the trade. Now, here's the thing. There's something that's called slippage, okay, slippage, which means that let's say that you place a trade at market execution, and I'm going to bring out my pen here, and you place it right here where my green line is, where you saw that I did place a buy there. Let's say that that level is 13315. Okay, let's just say that for example. I can't tell because I took a snapshot. So let's say it's 1.13315, okay, where we place the buy. Now, if the market's already going up and it's going up very rapidly and you placed a buy there, you could actually end up entering at 1.13317. Okay, that is possible. However, again, remember that last number is the pipette. It's not going to make a huge difference, you guys. Chances are it will move by a pipette or two. It's not really a big deal. Most of the time when you enter at market execution, it's going to be right where you want to enter and it'll be perfect. Okay, so in terms of like drawdown or any negatives to that, there really aren't that many in Forex because of the high liquidity and how fast your orders are executed. Now, there is a contingency to that, which is this. It all depends on your broker and their liquidity provider. Okay, so if you have a broker that doesn't have a very good liquidity provider, you could have a lot of slippage, okay, where your order doesn't get placed exactly where you want it to. It could say, you could place the order and it could say loading or waiting, and it won't place the order right away. So you want to make sure that you have a good broker, which of course we cover in the training, who the best brokers are with little to no slippage and very tight margins, okay? So that's spreads, very tight spreads, because that is a huge advantage to you as a trader. So we want to find the brokers that give you the most advantage. So again, very simply put, if you place market execution and you place a buy here, you are going to enter right there. That's where your entry is going to be, okay? and it's going to instantly put you in the trade. So as soon as you click market execution and place the trade, you're in the market, you're trading, okay? Now, that's the most basic order type, and we're going to go ahead and go over how to do it, but I'm going to show you how it works first, okay? So again, that is a market execution. Now, let's go over what a buy limit or a sell limit would look like, okay? So let's first talk about a buy limit. Now, I want you guys to take a look at this chart, okay? And remember, we're looking at the two trend lines and whether we should buy or sell. So if we're looking at this trade and we're looking to place a buy, where would we ideally place the buy? At the bottom trend line, right? At the bottom trend line. We're basing it off of market structure and price action, okay? So let's say, for instance, now in this case, I don't know that we're really expecting this to happen, but it could. Let's say that, I'll take another snapshot and show you guys visually here. So let's say that we're looking at this and we're saying, okay, price is right here right now, right? Let's say we're expecting price to go down here before it makes its move to the upside, okay? So let's say that we're expecting price to go down a little bit. So we don't want to enter right here, right? Because we expect it to go down a little bit before it goes up. We don't want that drawdown. We don't want to be in the negative before we go up. We want to get the perfect entry. So what you're going to want to do here is, if you believe that it's going to hit this level right here, you're going to place your buy limit right here. Okay, your buy limit is always going to be below market price. Let me say that again. Your buy limit will always be below market price. Okay, below market price, because you're expecting the price to go down and then come up. And you can see I just ended that and look at it, it did go down even more. So let's take a look at this real quick. So hypothetically speaking, based on this trade, we said it was going to go down a little bit, and it has. So let's say we said the entry was right here and we place our sell limit here. What that means is price is going to go down past our entry first and then U-turn to the upside, okay? That's how a buy limit works. So you wouldn't enter the trade here once it crosses and goes below. You would be entering after the U-turn and it starts going up. Why is that an advantage? Okay, so again, you're thinking of a buy limit or a sell limit really as a U-turn, okay, a U-turn, where it goes below your order first, and then when it passes it in the direction you want it to go, which is up, right, on a buy limit, it's going to activate your trade. That is the advantage, is that you're already having price action in your favor. So it's not going to activate when it's going down the way you don't want it to go. It's only going to activate when it U-turns and starts going back up in your favor. So that's why buy limits are very favorable orders, because that's how they work. And it's a huge advantage in terms of the strategy that we use. I use limit orders all the time. Now, because I generally do trade a reversal, a limit order is what I would trade. So again, limit orders are great for reversals. Okay, because you're expecting it to go down and then reverse to the upside. That's a U-turn, right? Right there, it makes that U-turn. I'm hoping for price to hit this point and then keep going up, where my limit order would be activated. Okay, let's talk about the sell order, and maybe this will make a little bit more sense. So in terms of a sell limit, let's talk about that. So let's say that we're over here on the chart. This is perfect right here. And we're looking at this area. And we are right about here. Okay, we're right about here. Let's say that the rest from this point on doesn't exist yet. Okay, and we're only right here, and price right now is right here. Now, if we're looking at our trend lines, we're looking